Welcome to This Explainer. Today, we're cracking the code on exactly how top financial educators hook their audiences. We're talking about translating complex, dry data into pure retention-grabbing gold. If you've ever tried to explain a highly technical topic and honestly felt like you were just talking to an empty room, well, you're absolutely in the right place. We are diving straight into the hard data today to figure out what actually works, what totally fails, and how you can keep a learner absolutely glued to your content from start to finish.
So let's kick things off with this honestly staggering number straight from pre-publish. Ready for this? The average personal finance explainer loses nearly half of its viewers before they even hit the halfway mark. Literally 50%, just gone. Now, it's not because people don't care about their money. I mean, they care deeply, right? But somewhere between clicking that thumbnail and actually getting to the core value, a massive disconnect happens.
To fix that massive drop-off, here is our roadmap for today's explainer. First, the audience retention problem. Second, hook with concrete outcomes. Third, translate the financial jargon. Fourth, use visual progress markers. And finally, number 5, concrete scenarios and transparency.
All right, jumping right into section 1, the audience retention problem. What the data clearly shows us is that creators tend to front-load all these boring definitions and textbook theories. They kind of forget that viewers clicked to get actionable real-life steps, not a surprise pop quiz. Seriously, imagine clicking on an explainer called How to Save 10K This Year, and the host spends the first 4 minutes meticulously defining the theory of compound interest. Yikes! Retention is really all about respecting your viewers' time and framing that complex information as an unfair advantage for them, definitely not a college lecture.
Moving right along to section 2, hook with concrete outcomes.
This is absolutely crucial. You always want to open with a concrete dollar amount. You gotta prioritize the tangible outcome over the abstract mechanism to instantly spark that curiosity. Look at it this way. When you lead with a specific result, like, this strategy saved me $4,200 last year, you instantly create a burning question in the viewer's mind. They're thinking, wait, how did they do that? They want to see the destination before you hand them the map.
And the payoff for doing this is huge. By leading with that specific result, the analysis actually shows a massive 15 to 25 percentage point difference in first 30-second audience retention. That is a staggering metric. Literally, just swapping a theoretical concept for a concrete outcome keeps up to a quarter of your audience around, people who would have otherwise just vanished in the first 30 seconds.
Okay, section 3, translate the financial jargon.
Now, the secret here isn't to dumb things down. Not at all. It's about translating formal jargon into accessible language that completely removes the friction for your casual viewers. Think about the explain it to a friend at dinner test. Terms like asset allocation or unsystematic risk, they might feel totally natural to you. But to a casual learner, they're like hitting a brick wall. But if you just say, spreading your money so one bad pick doesn't ruin you, you're delivering the exact same high-level concept, just with absolutely zero friction.
Which brings us to section 4, use visual progress markers.
Whenever we learn something new, our brain is constantly in the background calculating the effort it takes to reach the finish line. It's that classic, are we there yet feeling? Well, the ultimate script framework that high-retention creators rely on is hook, build, payoff. By putting numbered steps right on screen, you break these complex topics into completable, bite-sized units. A 12-minute explainer on budgeting can feel like it's dragging on forever. But tell them there are 5 steps and visually show them they're already on step 3, suddenly the finish line is right there. Someone who is about to click away will push through just because they can see the progress they're making.
And our final stop, section 5, concrete scenarios and transparency.
Vague, abstract advice simply bleeds viewers, but concrete, highly specific details, that locks them in. Take the channel Alux, for example. They completely reset viewer attention by showing exactly how many square meters $1 million buys in different cities around the globe. 16 square meters in Monaco versus 91 in Dubai. Presenting data like this means your viewer isn't just sitting there passively listening. They're actively comparing, calculating, and really engaging with those concrete numbers in their own heads.
The exact same logic applies to scenarios. Instead of giving super vague advice about getting out of debt, dropping in a highly specific, realistic example like Sarah's situation right here forces the viewer to benchmark against their own financial reality. If you just casually say, hey, let's say someone has debt, nobody really cares. But the second you use real numbers, a real name, and real timelines, the viewer subconsciously maps Sarah's situation right onto their own life. They become genuinely invested in her outcome.
Now, speaking of momentum, let's talk disclaimers for a second. To build total trust without absolutely killing your retention, just use a clean 3-second text overlay. Please do not verbally read a boring legal disclaimer. Seriously, so many creators waste their precious first 30 seconds defensively reading legal text, which basically screams to the audience, hey, this isn't real advice, right when you need them to trust you the most. A clean visual handles the compliance seamlessly, and it keeps your story moving forward.
Transparency is another massive retention hack. Channels like Financial Education and Proactive Thinker, they win because they share specific, real portfolio numbers. Whether it's transparently revealing their exact cash positions or exactly how they earn 28 grand a month, people love peeking behind the curtain. And look, you don't always have to expose your own personal bank account. You can absolutely use historical data or hypothetical portfolios. But the specificity of a number, like $47,832, will grab attention so much better than a generic phrase like invest for good returns. And guys, we know for an absolute fact these strategies work. Educators who actually flip the script to prioritize outcomes and use real data see their viewer retention absolutely skyrocket. Going from a 35% to a 52% retention rate, that is not just a minor bump. That is a real game changer. It completely transforms the reach and the impact of the explainer. It's hard proof that your framing and your structure are literally just as important as the data itself.
So, stepping back, you now understand exactly why finance content suffers from such massive drop-off rates. And more importantly, you've gained the concrete tools, everything from specific outcome hooks to visual progress bars, to keep people absolutely fascinated from start to finish. Notice what we just did there? By explicitly recapping what we learned, we create this awesome sense of accumulating value. You probably feel a bit smarter now than you did 10 minutes ago, right? And that is exactly how your audience should feel at the end of your content.
So, ending on a proactive note here, ask yourself, how are you going to structure your next explanation to really respect your audience's time and turn all that complex data into an irresistible story? The hard data is right there, and the framework is completely proven. The only question left is how you're going to apply it. Thank you so much for learning with me on this explainer today, and I really challenge you to put these structural hacks into practice right away.